If you ignore the verified intelligence I'm about to share with you, you are going to miss the single largest transfer of wealth from traditional markets to the blockchain in history. And I want to be clear, this isn't speculation. This is happening right now. Look at this number, $7.1 trillion. That's the size of the assets managed by the very first Wall Street titan to make its move. And here's the twist you won't see coming. This isn't some hot new crypto startup. No, this is Fidelity, a cornerstone of the entire traditional financial system. And with one single move, they've just put the entire US market on notice. On March 20th, Fidelity dropped an absolute bombshell with this official SEC filing. Let me break this down for you. They aren't just asking for another ETF. They are demanding, literally demanding, the legal authority to bring crypto custody and direct trading to their millions of mainstream investors. So by the end of this explainer, you're going to understand the 3 verified signals that prove this institutional migration isn't coming, it's already here. Now, you might be thinking Fidelity's move is just a one-off thing, that it's happening in a vacuum. Well, it's not. It's actually the direct result of a very quiet, very systemic, and very deliberate regulatory shift that has already been approved. The foundation for all of this has already been laid. So let's talk about signal number 1. The SEC has officially given NASDAQ, yes, that NASDAQ, the green light to trade blockchain-based tokenized versions of traditional stocks. I want you to really think about what that means. The second largest stock exchange in the world now has regulatory approval to operate on-chain. The gate is wide open. And if you thought that was big, get ready for signal number 2. In a truly historic joint announcement, the Federal Reserve, the OCC, and the FDIC have confirmed that every single U.S. bank can now hold tokenized assets directly on their balance sheets. This is not a test. It's not some pilot program. It is a system-wide unlock, and it removes the final barrier for every regulated financial institution to jump in. You're watching Crypto Global News. And look, if you are watching this without a subscription, you are missing critical alerts just like these. So click subscribe right now to stay on the timeline. It is completely free for you, but it gives me the motivation to keep making more of these explainers. Okay, so at this point, we've moved way beyond the question of if this is going to happen. We are now talking about when. And guess what? We have confirmation of the timeline from the highest levels of the SEC itself. This right here brings us to signal number 3. These aren't my words. These are the direct words of Paul Atkins, a former SEC chairman. He has put a concrete 2-year timeline on the complete migration of U.S. markets. A statement like this from a source like that confirms it. The era of regulatory hostility is over. The regulators are no longer an obstacle. They are literally handing us the timeline. So the big question then is, how is all this even possible from a technical standpoint? For a multi-trillion-dollar migration to actually happen, you need institutional-grade infrastructure. And the data shows us that infrastructure isn't just ready, it's already seeing explosive growth. The rails have been built. Just look at this chart. Tokenization on the XRP ledger has surged by an unbelievable 2,200%. Let me be clear, that's not retail activity. That's not you and me. That is the market itself preparing the technical foundation for the massive wave of institutional assets that is about to hit. And this kind of growth is only possible because the technology was purpose-built for institutions. You have features like permissioned domains, which basically create private, verified environments. You have a permissioned DEX for totally compliant trading. It's all about providing the built-in anti-money laundering and know-your-customer capabilities that Wall Street legally requires to operate. This is the compliance engine that makes it all work. I'm curious which one of these institutional tools you think is the biggest game changer for Wall Street adoption. Head over to our community post right here on YouTube and let me know. And for the absolute fastest updates, you need to join my Telegram. Just use the QR code on your screen or the link in the description. You will get the alerts there first, guaranteed. So what does this all mean when you put it together, when you connect to these signals? It points to one single, undeniable conclusion. We are witnessing what I call the Great Convergence, that perfect moment where institutional demand, full regulatory approval, and technological readiness have finally perfectly aligned.
So let's recap the 3 verified pillars. Pillar number 1, overwhelming institutional demand, spearheaded by Fidelity's $7.1 trillion move. Pillar number 2, total regulatory approval, with both NASDAQ and the entire U.S. banking system now unlocked. And pillar number 3, the technological readiness, proven by the insane growth and compliance tools of the XRPL. All 3 pillars for the on-chain migration are now firmly in place. This leaves us with just one final critical question. With the rails built and the regulators fully on board, which multi-trillion-dollar asset class is going to be the next to move on-chain? The answer to that question is the key to this whole transition, and it's exactly what our next Crypto Global News Explainer will reveal. You can watch it right now by clicking the card that's right there on your screen. Go ahead, click it.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.